Hey, what's up, guys? Sam here, and I'll be doing the free video for Friday, February 9th, 2024. So another week is in the books, and this might come as a great surprise to you, but it was another up week that closed near the highs. If you go back and you count, there's now 15 weeks, and 14 of them have been up. Remarkable batting average by the Bulls here. In the video last week, we were looking at a couple of warning signs that are setting up, and I told you that the market could probably go all the way through February OPEX before it has a problem. And I still am holding true to that. There's a couple of signals here that are starting to stack up, but I think that the market still has enough juice to get through next week, which is February OPEX. And then after next Friday kicks in the two worst weeks of the year, or the last 2 weeks of February, right? The seasonality from the end of February to the middle of March, I believe, is one of the worst of the year, and then from the middle of March through April is actually one of the best times of the year. So I do think that is setting up here. There's a couple of warning signs that are setting up. And again, these are warning signs that have not been triggered. So imagine a snake that you have not yet stepped on, right? The snake is still there, but it's not dangerous until you step on it. And so it hasn't triggered. So primarily being that one right there, which is the extreme reading on the High-Low Pro. You do have an extreme reading on the trend oscillator as well, but that reading is sustainable and good. Whereas this one down here, while it is good and bullish, certainly, it's not overly sustainable. So you can definitely go another week with this, but I'm personally going to be looking for a little bit of counter trend action as soon as the end of next week. Be aware that there are some targets that are lining up here, long-term Fibonacci targets that line up at about 515 to about 520 on the SPY. And these are very long-term Fibonacci targets. So I do think that eventually we will have to go there. It would be kind of cool if we could do it in a week, next week. Just go ahead and get it over with. Give us a 20-point up week. Kind of a blow-off top situation. That would be somewhat ideal for the idea that I'm sharing. I doubt that happens. That seems probabilistically unlikely. But just jot those down or just make a mental note. 515 to about 520 on the SPY are your ultra long-term Fibonacci-based targets. If we go to the Qs next, and this will probably be one of the shortest videos we've ever made because there's really not a lot of nuance here. The main thing I just want to stress to you guys is everything looks great, and like John says all the time, that trading is a lot like intercourse. It feels the best right before it ends. And I would certainly say that these markets feel pretty good. And you can kind of sense the euphoria everywhere. And that's usually right before things get a little bit in trouble. So one thing that has changed from last week to this week is the extreme reading has kicked in also on the Qs. Last week it was only on the SPY. This week it's on both the SPY and the Qs. So not really a lot of nuance here either, right? This is just almost a perfect uptrend. You could argue actually that it's too good in some ways because you are, hitting 3 ATR on the SPY. You're above 3 ATR on the weekly time frame, but nothing really changes here. I think that there is enough juice here to continue to go another week to get us through February OPEX next Friday. And then after that, I do think that the signals combined with the seasonality will start to kick in. I did the video with the folks in the gold room before this video. And, we looked at bonds, we looked at the dollar, we looked at VIX. Nothing was particularly interesting except for the VIX. So I do want to show you this signal. And this signal works relatively well with the idea that I'm sharing with you. So the idea that I'm sharing with you is that we could have another up week next week through Friday. And then after that, some pretty strong seasonality kicks in. And it's not just the seasonality. I'm not a huge fan of seasonality on its own, certainly. But when you're going into the seasonally the weakest point of the year, or one of the weakest points of the year, which is the end of February through the middle of March, and you have extreme readings on basically everything all at once, it just kind of sets the perfect stage for the traditional seasonality to kick in. So one signal here that I thought was somewhat interesting is on the VIX itself. And really what we just want to do is just focus on the squeeze histogram. So you see when you get a yellow bar here on the squeeze, that's kind of the precursor to the pop. When you first get your yellow bar here, that's the precursor to the pop. You've had now 1, 2, 3, 4, 5, 6, 7, 8, 9. You've had 10 bars here, 9 of which have been red. And then as of this week, you're putting in a yellow bar, right? So this is your first bar that goes against the grain. And this works really well in line with the idea that I'm sharing, because that would mean that next week would put in another yellow bar, and then the week after that would then start to move this thing up. So we'll see if that plays out, but that's kind of the general idea that I'm seeing. Going into next week, some of the stocks that I'm going to be looking at are just going to be more of the same, really. I think Adobe's kind of an interesting setup. We had played MDB, which is MongoDB, based off the same setup that I'm seeing in Adobe. And then there's also a setup setting up in the IWM. So we'll close there. We rarely talk about the IWM. I'm actually not a huge fan of it. Maybe I need to get over my bias. But frankly, when tech goes up every day, who needs the IWM? But be aware of this signal going into next week on the IWM. It is a proper one. And there is a chance that next week we could see the IWM actually have a pretty large up week based on just this signal combined with this right there. So while I normally would tell you, hey, just focus on what's been working, which is tech, 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 and more tech, maybe next week will be tech, 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 and a little bit of IWM. So just kind of keep that one in your back pocket. And then also don't forget the seasonality kicks in not next week, but after Friday, after OPEX, kicks in the week after that. So we'll see if it plays through. The signals are implying it will. Of course, we do need to see a trigger. We'll have one more video together next Friday, so we'll have a chance to discuss that well ahead of time. So no need to go out there and load up on puts unnecessarily without a trigger. We'll look for a trigger first, and then we'll take the appropriate action. All right, guys, that's my time. Have a great day. Leave us a like before you go somewhere else on the YouTube, and I'll see you next Friday. Hey traders, this is Sam with Simpler Trading. I want to thank you for watching today's video. Hopefully you found the information in it helpful. If you did, leave us a like, leave us a comment. It really does help us out with the algorithm. And if you want to see us trade live with our own real money and be part of the community, come and check us out at simplertrading.com.